Srivastava, founder and strategist at IndiaCharts.com, is now joining in. Rohit, what are the charts telling you? It's it's a scary looking screen, particularly when you look at the broader end of the market. You've been a bit bearish, cautious in the market. Is there more downside, or are we closer to the bottom?
So you see, we are getting very close to the November lows, and people will tend to feel a little optimistic, hoping that that level holds. But when we look across the board, especially you are seeing financials, Bank Nifty has already broken the November low, so has the private bank index. So what we are seeing essentially is, weakness across stocks and sectors. It may or may not translate into, Nifty, which is the main index everybody's watching right away, because in between you got some support in the defenses, which is FMCG. Today you're getting some support in IT, and I think that is sort of slowing down the sell-off in Nifty standalone. But overall, the market breadth is very poor, and we are seeing breakdowns in stock after stock, which should be more important from an overall portfolio investing perspective. So I don't think we are done here. We are breaking levels on the weekly charts. Today is Friday, so we'll be breaking possibly the 40-week average on both the Nifty 500 or the Nifty itself. In fact, and the Bank Nifty. So some people watch the 200-day. That also will be all of them will be breaking today. So those are important levels, I think, that we are breaking down on. And what I think is the likely scenario, apart from short-term bounce backs and rallies that you get for a couple of days, is that we might continue to decline somewhere into early March. That is where I would then start looking for a potential first potential bottom, and reassess the situation as to whether the worst is done. But I think there's still downside here in the market.
Rohit, so you feel further downside despite the kind of bounces that you're seeing. Now, in case of a recovery, which are the sectors, what kind of stocks would you be looking at to play the recovery in case you feel there is a recovery on the corner?
So no, I don't see it round the corner, but if I have to, take a bet on something, it will be defensive. The pharma sector has stood out. So that would be one place where you can continue to try and hide or at least, protect returns. That's what usually happens. Most funds tend to allocate there, so it ends up getting some support. But of course, in major sell-offs, we have seen pharma stocks also fall. But it's just the defense that you can get. FMCG, I'm not over-optimistic. The thing is, it's fallen too much, which is why there is a case for it to bounce back. But the bounce would be counter-trend in nature. This is just the first leg down for the FMCG stock. So therefore, you have to see it only as a trade. If you're betting on any upside from here, because they've fallen like 15-20% already. But once you're done with that trade, you should be prepared that you see lower lows in FMCG. So pharma looks like the only good guy. And I know the next question usually comes up on IT because it has held out recently. But my fear is that if global markets, start shaking up a bit, then the US IT sector gives up, and then the Indian IT sector follows. And that is, I think, a different kind of risk that we should also keep in mind.
But your broader call is that we are headed much lower from here on?
That's right. I think we are headed much lower. We should, keep in mind, like I said, by March, maybe 21,000. That's the number I'm sort of keeping in mind, plus or minus, that we can get to, apart from any near-term bounce back that you might see.
So Rohit, would you be initiating any fresh short positions either on the index, individual stocks, individual sectors? Because 21,000 is still, still significant downside from the current market price, right?
Yeah, so you have to look at it, on a trade-to-trade basis, because this market, I'm sort of calling it the silent bear in my most recent report. And the silent bear basically means that we are very quietly seeing a sell-off happen in individual stock sectors. Say, for example, if you look at the realty sector, it's been just falling day after day. You saw something similar happening to stocks in like Tata Motors and Reliance a month back. Now they are sort of trying to stabilize a little bit. So we are quietly seeing that now in PSU stocks. Most PSUs are falling on the wayside, even as the Nifty is trying to hold on. So in this situation, you have to look for opportunities at a stock-specific level where the breakdown and setup shows up. On the Nifty, probably on every bounce, we look for that. Because we do see the Nifty eventually head lower. But you have to take that kind of an approach, stock-specific, sector-specific, where the setup shows up.
Global markets have also topped out and headed lower. What about the US markets, which has had a banner year last year? What's the broader call on the global markets and the important indicators like the dollar index, yield?
Yeah, so on the US market, I'll tell you, we are at a very important level, 5820. That's the number we are watching. We've taken support close to that twice in the last month. This is probably the third time we may attempt to break it. If we do, then that would give us a trigger for a further decline in the US market. Now, what would be the trigger? So that becomes the next big question. And the real problem that is really brewing, I think, in US markets and is sort of spreading to other parts of the world is the bond market sell-off, right? So you're seeing a very quiet and slow sell-off in US bonds over the last month. Yields have inched up all the way to 4.7, 4.8%. They're getting closer to crossing the 5% mark. And now that is beginning to rub off on other bond markets. So you saw German, bond yields break out of a tight range. You saw UK bond yields hit a new multi-year high in the last 2 days. And you're seeing Japanese bond yields also rise. Now in India, fortunately, we haven't seen that kind of an impact on bond yields, but I would keep a close eye on whether Indian bond yields also start moving in line with others if they continue in this direction. If I simply look at the charts of the global bond markets, it does look like this move higher in bond yields is not over, and it is coming as a surprise, almost looking like the Fed is losing control on the bond market. So if yields do move higher, I think that is the elephant in the room right now, which will impact emerging markets, global equities overall, and possibly can create that sell-off, which we are still not getting a clear confirmation of a topping out in global markets. There are some signs that it's happening, but like I said, S&P, we'll watch 5820, and the critical factor would be bond yields, and then that rubs off to the dollar, which was your next question. That if yields are higher, the dollar is higher. Even today, last 2-3 days, the dollar index just been flat. It's not moved up or down much, even though there's been some hope around that happening. And as it continues to head higher, that's putting pressure on our own currency, which has been, I think, the only place the macro issues have shown up in India has been the currency, the rupee weakening. It's still not showed up in the bond market, but the weakness of the rupee should be looked at because there's been a very tight correlation. The dollar index itself, bottomed out just around the last week of September when Indian equities topped out. So they've actually moved very much in tandem. And I think that has been the first place where we've seen damage.
By the way, markets are now back in the green, at least for the benchmark indices, and it's a near 200-point recovery on the Nifty from the day's low of 23,344, 190 points up in the green now for the benchmark indices. We've been going through a very sluggish week patch. Just a couple of days back, the Nifty had hit a high of about 24,200. After that, that correction started. And today, perhaps after this kind of fall of 900 points in a span of few days, we were due for a bit of a pullback, and that seems to be playing out. Rohit, just initial thoughts on this intraday recovery?
So I think it's just a counter trend bounce. If I even drill down to a very low time frame chart, we can trail, say, with the 20-hour average that's at around 23,600. But like I said, we also on the weekly level. So what we'll be watching till the end of the day is, do we close below 24,542? That's the 40-week average. And if we stay below that, it would be a first time we'll be breaking that level in quite a while.
Understood that, Rohit. Thank you so much for joining us, giving us your view on the markets. Slightly cautious still, and you feel there's significant downside even from current levels as far as markets are concerned. But thank you so much for joining us and giving us your views.